Hey guys, Spiritual Living on this channel is for educational purposes only and is not intended as financial advice. So now that we've entered the den of sidewaysness, let's check out the Bollinger Bands, the premier sidewaysness indicator. When we're trending, we use trend metrics. When we're not trending, it's not a good idea to use trend metrics. They tend to tell you a bunch of nothing, a bunch of garbly mess, garbly gook. So in order to know how to read Bollinger Bands, you look at the caliber of the squeeze. When we're tight, that says a move is coming, volatility is low. When we've expanded, that says the move has happened, volatility is high. If we consolidate below the 20 SMA, which is this red line in the middle, as the squeeze is happening, that gives a bearish bias. If we squeeze above the 20 SMA, then that projects a bullish bias. Historically, over the past year, we've only had a couple squeezes of this caliber. All of them have been 20% moves or more, at least on the initial move. So if we measure that to the current price, that gives us 87 and 58. Now, let's see how that looks on the trend metrics. One other thing I'll say is it's really good to see confirmation over multiple days. So if we're this tight, for multiple days and red, definitely bearish. You know, if we're this tight, multiple days in green, definitely bullish as far as a bias is concerned. Clearly there can be all sorts of garbly mess. It's not a crystal ball. If we look at 2018, you know, it was all over the place. But on balance, if we are bearish for a week below the 20 SMA as we're squeezing, I'm not bullish, certainly. Another thing I'm afraid of from the bearish perspective, the bearish lens, is this potential for a head and shoulders here. And yeah, you can get a head and shoulders anywhere you want as far as on the chart. We need to make a higher high than this right shoulder to really cancel this out. Otherwise, it doesn't look great as a whole. So if we look at that 87 area again on the cloud, the key tune's at 8.5. There's a pretty large C-clamp here, about 18%, I'd say. Breaking above the Tenkin, this blue line, is a good start. These type of things can take a long time to play out, but when they do, you get a nice move. You know, you get a nice mean reversion. In this case, it would be to 8.5. If by some miracle we are at 9.2, you know, that's fine too, but there's going to be a lot of short interest all the way in here. Definitely. We can also argue that an exaggerated bull div formed here, high or low on RSI, same level on price. Certainly not as bullish as a frank bull div with a lower low in price, higher low in RSI. But overall, this picture looks pretty good for mean reversion to 8.5. If I'm short, I'm nervous that we're not making lower lows. But overall, if I'm short, I'm certainly comfortable because we're below the cloud and definitely not bullish on the trend perspective. If we look at the 5200, same thing. We have a death crosser below the 200. Definitely not bullish. 8.4 would be the resistance or mean reversion target. So 8.4, 8.5, 8.7, all zones to watch. Certainly, if we look at VPVR, if we look at 8.7 and 5.8, there's not really anything there for either place as far as massive support or resistance. If anything, we'd wick to 5.8 and then bounce to 6.4, or we'd wick to 8.7 and bounce back to 8.4, something like that. Or we just don't hit that 20% move target, like whatever. But historically, when we've gotten this tight, it's been a pretty decent size move. So it's definitely leaning bearish right now. If we look at the multi-year pitchfork, we're at the end of the rope here, similar to March this year. You know, we're at the bottom zone, so if we don't bounce, it's curtains for a while, probably. If we do bounce, if this is the bottom, 13K plus would be the target, which sounds crazy, but based on the trend, that's what we're looking at. For a safe long, I'd look at the 4 hour. That's what I'm watching. If we get a bullish Kumo breakout, which is 73.73, so there's some confluence there between the 20 SMA and a bullish Kumo breakout. You know, 7.3, 7.450, 7.550. There's lots of horizontal resistance on lower time frames here. You can even look at the low here as resistance on the way up. there's definitely shades of bullishness once we're above 7.3 above the cloud, but where we're sitting right now, definitely more neutral to bear than bull based on the cloud. If we look at the OKEX futures rollover dates, historically they represented a local high or local low in the market. I bring this up because we just had a rollover yesterday for OKCoin, and where we're sitting on the price doesn't really match necessarily what's going on in the market as far as the pattern, So maybe it's just broken down, maybe it's nonsense at this point. But, maybe let's say we get a pop to 10K somehow. Then we can say, okay, the pattern is back on the table as far as like high, low, high, low, high, low. But right now where we're at doesn't really match historically. I think that's probably because the CME futures contracts have sort of taken the lead. These biannual contracts have either been down or up. There's been no in between, really, even though most of the open interest is generally in the forward contract or the most near contract versus the biannual. So whatever mind melding is going on at the CME, whatever those traders are doing is certainly working out from a trend perspective in the biannual case. If we flip back to the OKEX futures and we look at what the backwardation or forwardation has been over the past year, you can see that we were in a long period of backwardation from August to May, mid-May, right? And we definitely broke down. We had bear fuel. And then even after we broke up, we were still in heavy backwardation. Then we went into heavy forwardation, contango, whatever you want to call that. And at that point, the market really could only handle so much premium on the quarterly contract. And percentage-wise, I don't know what this is, but you can look at that. So we get the premium decay, we're getting more and more bearish, and then all of a sudden we're mostly in backwardation again. It's certainly not as heavy as we were in the actual bear market, the throes of the bear market. And now as we get this new contract, we're getting premium again on the quarterlies. So I don't know if any of this is necessarily actionable other than the highs and the lows on the premiums, but it's certainly interesting to look at, how bearish are futures? Are they multi-month in backwardation bearish, or are they just, zeroing out, which is basically where we are now. Flipping gears to ETH, using the same tool set, using B-Bands, Cloud, 200 EMA, blah, blah, blah. So historically on the daily, there've only been about 7 squeezes of this caliber. Again, it's bearish, no surprise. As far as the bias is concerned, it's hard to measure the expected percent return or percent move for these because they vary so widely between like 40% and 300%. So who really knows from that perspective? But unless it's above, 150, which is probably what this 20 SMA is, it's going to continue to lean bearish. If you look at the cloud and the 200, again, just like BTC, we're bearish. Just like I've said in the past 15 videos, this volume on ETH has just gone to nothing. So until we get some volume one way or the other, it's just going to be BART City, population us, all over the place. There's certainly a C-clamp not as big as BTC. 165 would be the target here, the Kijun, and 187 is the 200, and it's this bite out of the cloud here. There's a better case to be made for a bull div here. Certainly nothing to write home to Ma about, as they say, but it's there. And if you go to lower time frames, it's definitely there. This 150 to 160 zone has been like no man's land. It's either been support or resistance. Right now it looks like it's resistance. So if that flips and we start grinding, above 160, certainly can get more bullish in that case. But where we're sitting now, definitely leaning bear. I don't know if we're $50 bear, which is what this old school pitchfork is sort of projecting. It's not great from a trend perspective. It's either been at the top or the bottom of this. It hasn't really been in the middle. But if it starts breaking down, 50 is definitely in the cards. I don't think it'll get that low. But based on the mean or the rate of change of the trend, 50 is on the table. If you remember a couple of videos ago, there was a potential bullish pitchfork that at this point is definitely dead. But much like triangles, you can keep drawing these things until a bottom is in. Then you can say, okay, maybe we have a chance here. If by some Christmas miracle this is the bottom for ETH, 285 would be the mean projected upwards based on the rate of change, but certainly not something I'm expecting or hoping for based on anything really. Everything's just bearish, you know. Lastly, if we look at ETH BTC using the same mindset, everything sideways, we're going to look at B bands. Over the past 2 years, all of these have broken down. All these squeezes have been bearish. None of them have moved to the upside. The difference this time, perhaps, is that it's basically on the floor of the volume profile, the strength of the floor. So if this breaks, you know, 0.01, certainly reasonable. If it doesn't, you can say, well, you know, right now it's support until it's resistance, and I'm just going to treat it as support until it breaks. So we can say, well, bands look bearish, but the VPVR is as bullish as it can get from a support perspective. So it's hard to want to short this looking at all the volume interest that's historically been here. Looking at trend metrics, we had a failed bullish Kuma breakout. We've been on a death cross for the past year plus. We had this failed diamond bottom reversal. It's just been nothing but bear for ETH BTC. Seeing these concave, you know, double top sort of situations certainly doesn't give me any confidence as far as bullishness in the near future either, but that it can all change, obviously, if we start moving up towards the 200 versus just getting pounded by the 50. And then just for S's and G's, if we look at XTZ ETH, which maybe isn't a market pair that's tradable directly, but it's in the subconsciousness of the mind in the market. You can say there's some sort of referendum on, you know, staking or whatever, hype, staking hype. And this thing has just been a rocket ship since early November. So XTZ has just continually gained on ETH over the past couple months. Looking at the most recent daily close, you can say that's a spinning top. Usually represents a local top is in price, but I'm not going to call any tops in that one. That's all I have for this one. Like, dislike, comment, share, subscribe. Hit me up on Twitter, and happy trading.